Hey everyone, Justin Holland here with the Mad Insurance Show, making a difference in insurance. We're so glad you joined us on the show today. We got episode 23 today, so we're going to talk about I'm going to spend a little bit of time on some news, some breaking news, some topics that have come up that's going to affect health insurance specifically. So I'm going to be bringing that up. We'll talk a little bit about some health coverage options that we're getting a lot of people reaching out to us about as well. And then I think I'm going to probably wrap up the show to discuss long-term care. Long-term care, I had a meeting with one of our trusted partners, One America, yesterday morning early, and it was a really good visit. Dialed in some stuff on what we need to be aware of when it comes to long-term care. But again, you're listening to the Mad Insurance Show, making a difference in insurance. And I'm Justin Holland. I'm with Texas State Insurance Services and Palmetto Life Group. We've got two agencies here in the San Antonio area servicing all of Texas and South Texas. And so here's the deal. Texas State Insurance Services focuses on individual health insurance, Medicare plans for seniors, travel insurance where needed, as well as employee benefits for small, large, and medium-sized businesses that might need help with your employee benefits program, or maybe you're looking to offer that as well. So we can help you that with Texas State Insurance Services. The number to reach us at is 210-880-5316, or visit us online at txstateinsurance.com. Palmetto Life Group is a division that we created really specifically for life insurance, long-term care insurance, Social Security planning and analysis support as well as it relates to your retirement. And then we've added auto, home, and commercial lines of business there. So we'd love to talk to you about the auto and home and commercial, even umbrella insurance if you need it. Contact Palmetto Life Group at 877-357-5316 or visit us online there at palmettolifegroup.com. So without further ado, I'm going to talk about some articles that I came across, and I think it's important to discuss today. The alert I got from a carrier just last night, actually. So this is just something that came across my table at the office or desk at the office, so to speak, on my computer. Is we are looking at possibly another rate increase hit on Medicare supplement plans. I got an update. Now, this was specific to Florida through United Healthcare. They were looking at increasing premiums on female rates to 15.2% rate increase, and then male increase was going to be 20.3. So that is something to really keep in mind and look at, because we're starting to see from the carrier, so to speak, what to expect or anticipate on Medicare supplement plans increasing. Now, remember, if you're on Medicare, you might still be on your employer-sponsored plan, which is fine. Granted, it is credible coverage. You want to double-check that. If you're on Medicare looking to go to Medicare, remember the two options are, hey, option A, getting a standalone medical supplement and a standalone prescription drug supplement, which is going to have an added cost, typically on the medical side or depending on the prescription drug plan. And then the Medicare Advantage plan, where you have managed care. You have an insurance company managing your Medicare A and B for you and providing prescription drug coverage to be compliant with Medicare, as well as dental and vision options. So this isn't really towards the Medicare Advantage. This thing that I want to talk about, or this subject, is just the increases that we could see on these supplement plans. I will tell you, on average, when I do a Medicare supplement plan for a client on the medical side, let's just call it $140, $150. Now, if they're aging in at 65, if maybe they're losing group coverage or retiring out at age 68 or 70, those costs would be a little bit higher. But let's just say $140 to $150 a month. That is a reasonable premium. You're going to be subject to a deductible. Many of our clients, say, hey, I really don't want to spend any more money on that. What can we do to possibly alleviate that added cost? Well, that's where the Medicare Advantage will come in. But others, and many of them on the other side too, of wanting a Medicare medical supplement, they want that peace of mind of being able to see pretty much any doctor that accepts Medicare. And that's where that comes into play. So when we see a female rate increase of 15.2, a male rate increase of 20%, those are absolutely, mid double digit increases, and those can add up. And we had double digit increases last year, okay? Even with some carriers that have been consistent on either single digit or no increase at all. So the reason I'm bringing this up is just don't be surprised if you get an increase letter on your Medicare medical supplement plan. Okay. We're going to look at this really closely. It might make sense to possibly go to another carrier. Granted, you can pass underwriting there. A lot of clients, we've been looking at going to a higher deductible Medicare supplement plan, and that has helped alleviate, the monthly premium cost, so to speak, with that carrier. That might be something that you need help with, and we'd love to help you out with that. Even if we weren't your agent prior, and you got that medical supplement years ago, let us know, and let's shop and see if maybe a high deductible supplement would help alleviate the premiums and give you that peace of mind of being able to see anybody that accepts Medicare. So this was important to bring up. I think the reason that we're seeing, the increased premiums on the Medicare supplements, I put some notes here. Increased healthcare utilization, that has been increasing every year. COVID, utilization finally caught up with premiums a few years ago, and I just still think people are still using their coverage and plan quite a bit. Inflation and medical costs, just the cost in the medical care is increasing, so that is a reason why you'll see these supplements increase. Aging population, higher claims experience, that's gonna be a factor as well. So, just be on the lookout for your, your Medicare medical supplement letters to come in over the next few months, possibly showing an increase, because there's no doubt United Healthcare is going up in the state of Florida. It'll be interesting to see what, rate increases we see here in Texas, specifically, because that's where the majority of our, clients are located. Just a quick reminder, Texas State Insurance Services can help you out with your individual health insurance, your employee benefit strategy, or your Medicare plans if you happen to be on Medicare or closing in on Medicare eligibility. And you can reach us at Texas State Insurance Services by calling 210-880-5316, or you can visit us online at txstateinsurance.com. So please give us a call if you're listening to the show over the weekend. The Mad Insurance Show, as I've reminded everybody, is just we're trying to provide as much value as we can as it relates to insurance. And that's going to be health insurance, employee benefits, Medicare, auto insurance, homeowners insurance, all kinds of stuff out there that I think is overlooked and needs to be we're trying to be a reminder on those things that could be overlooked, or maybe you just didn't realize that they're available to you regarding your insurance. I'm going to probably have a few guests coming up on the next few weeks as well. We've had plenty of them before in the past. So I'm actually pretty excited. I think we've got some great people lined up from carriers, from people that offer business services for all those business owners out there. And then we're trying to get some congressional candidates on the show. And actually, I just got a message back from one of them that I'm hoping we can get an idea of where they stand on health insurance and healthcare and the cost and the increased cost, and just not seeing much relief on that. So that'll be to be continued on future episodes. So let's take a look at some more trending topics or some news that I wanted to bring up. I brought up the fact that we are seeing increases on Medicare medical supplements. Another thing that we want to bring up is just be cognizant of your Medicare Advantage plan. Okay. We are seeing that come under a lot of scrutiny on the Medicare Advantage plans because CMS, which funds Medicare, is restricting the amount of money that they reimburse the carriers, and they're fighting it out, trying to figure out where that plays out over this month and probably into next month. But why that's important is because a lot of these Medicare Advantage health insurance carriers are possibly coming out of the market. They might be dismantling plans or removing plans from the market. We saw that this past fall. They're discontinuing some benefits. I want you to make sure that you are as proactive as you can be on your Medicare insurance plans, and we'd love to help you and take a look at that. And you might be perfectly fine with what you've got, but I think it would make sure to have a good strategy just in case some things changes or things come up to change in this fall going into the year 2027. Just we're seeing a lot of angst on Medicare, and you want to be as proactive as you can. As always, I'm going to give you some updates as we get them regarding the cost of insurance and what to see on how those are going to affect your Medicare plans. So I came across an article. This was dated March 12th, 2026. This was on NPR. And I try to look at all news outlets when we look for topics on the show, and not just for topics on the show, but just to keep us updated on some industry news out there. And this one caught my eye. Medicare Advantage dark money group tries to win higher payments for insurers. I just brought up a minute ago that you've got the insurance companies trying to make sure they know or have a handle on what CMS, the government, is going to reimburse them at as far as their Medicare coverage that they offer. And let's see here. Judging by more than 16,300 comments recently posted on a federal government website, you'd think there was a groundswell of older Americans demanding the federal officials hike payments to their Medicare Advantage health insurance plans. Yet, about 83% of the comments are identical to a letter that appeared on the website of a secretive advocacy group called Medicare Advantage Majority, a data analysis by KFF, Kaiser Foundation, out of their news outlet that is found. The dark money group does not reveal its funders or much less any other than say it's dedicated to protecting and strengthening Medicare Advantage and is powered by hundreds of thousands of local advocates nationwide. This is news to me, so I don't know where this group is being funded specifically, but it's on the radar of CMS and Medicare on their campaigns, and they're absolutely right at the beginning of this article. You would think that older Americans are demanding that the federal government, hey, I'm losing benefits here on my Medicare Advantage plans that you guys approve and fund. We need some help to make sure we don't lose some of the value add benefits that we've been getting in. So that was an interesting article. Let me dig in here a little bit more. Our campaign provides information and offers tools to concerned Americans to use and reach decision makers, legislatures, so to speak, on trying to, I guess, tilt their opinion and objectives when it comes to Medicare and healthcare. There's no doubt health insurance are unhappy with January proposal for the Centers of Medicare and Medicaid Services for the reimbursement that's going to happen in 2027. I brought this up on a few shows a while back that the insurance care companies were expecting to get reimbursed. I think it was 6, 7, 8% increase. Year over year, or at least for going into the 2027 year. And CMS said, "No, we're probably going to be below 0.1%." And that caught a lot of, or below a 1% increase. That caught a lot of these carriers off guard. It upset the stock market, so to speak, as well, seeing that. So this is something we want to keep an eye on. And again, I brought up a moment ago, you want to make sure that you are crystal clear on your current Medicare plan and your strategy for this year or future year changes as well. I'll go in a little bit more on the article and then we'll wrap up on this one. Let's say critics warn that these sorts of campaigns may create a misleading impression. I believe I agree with that because you really want it to look as grassroots support and not some orchestrated thing for maybe big money or maybe even the insurance companies themselves. There's no way for the public to know what the wealthy donors or special interests are funding. dark money groups like this, he said, but that means no scrutiny on who's really calling the shots. So, pretty pretty good article that I found online that just piqued my interest as far as dark money affecting a health insurance lobby on specifically the Medicare Advantage plans. So let's dive in to another article I found. I really want to talk about news today, and we'll talk about some other items regarding insurance. But something that came up was Dr. Oz says Obamacare enrollment may be too high. Okay. This is from NBC News. This article's dated March 9th, which would have been Monday of this year. Even as top officials for Medicaid and Medicare claims millions may have falsely enrolled into the Trump administration, and the Trump administration is urging younger people to sign up for high deductible ACA plans. So right off the bat, when I dissect that headline, you know, let's specifically go to urging younger people to sign up for high deductible ACA plans. That's great, but the open enrollment's done. So any relief from having younger individuals get on high deductible plans is only going to help is if there's high deductible plans that really meet their budget off of that. But also if the Obamacare, dynamic in the marketplace doesn't open up for special enrollment periods. Now, prior administrations, granted it was emergency, declarations or executive orders or whatever that allowed people to just, start shopping for health insurance outside of the annual enrollment periods. But right off the bat, just saying, oh, we just want young people to get in high deductible ACA plans. I don't know if that's going to move the needle for the exposure or the tsunami we're, so to speak, going to hit with the Affordable Care Act enrollments going into 2027. So let's dive into the article a little bit more. Although Obamacare signups have fallen significantly this year over skyrocketing monthly premiums, I've brought that up in prior shows. We had clients going from $200 to $1,000 a month just for single insurance premiums, and we had families going from $1,200 to $1,500 a month to almost $3,000 and $4,000 a month in premiums, which were incredible. Dr. Mahet Oz believes enrollments is still too high. Oz, the Trump administration's top official overseeing the Affordable Care Act, told NBC News that millions of people may have fraudulently enrolled or eligible for other types of coverage. Let's talk about that last sentence there. Fraudulently enrolled or eligible for other types of coverage. There absolutely is fraud going on in the Affordable Care Act where enrollments should not have gotten through, or maybe that was the case for years prior. They really cracked down on that fraud activity, I think, and really cracking down on it now because we've got special enrollments that we're submitting to the marketplace and are still getting rejected, even though we've got pretty good information showing, hey, this person qualifies for a special enrollment, they lost coverage. But let's talk about eligible for other types of coverage. I have many group health insurance clients that we struggle every year to get participation up on their group benefits plans. And the main reason why that we struggle, especially in South Texas, it seems, is that there are so many agents that are enrolling individuals into a marketplace health insurance plan and probably not asking if they have access to what's deemed affordable coverage from their employer. Now, granted, sometimes that employer sponsored plan is just too expensive, even for an employee only portion. But even if it's too expensive in the eyes of that employee, it's not for the government in a lot of cases because the government cracks down on specifically sized employer accounts on making sure that they meet the minimum requirements of affordability. Okay. So I mean, every year, and it's been tough. I mean, let's just call it 5 years now, on where a lot of individuals went to the marketplace, are getting a tax credit or subsidized coverage, and they no doubt either themselves as an employer offered coverage and should be on that company plan, or their spouse or both. And I think they're going to start cracking down on that. And that's going to be a problem because if the government sends, they send the employer sends reports to the federal government, and then those on the individual marketplace through their insurance carrier send reports on if you're getting a tax credit, and they reconcile that. So if you're on an employer sponsored plan, I mean, you're not on an employer sponsored plan and on an individual marketplace plan and receiving a subsidy of a couple $100 a month, there's a good chance you're going to owe that money back once that gets reconciled. We haven't really seen that enforced in years now, and I think that's coming to rear its head up and catch a lot of people by surprise. So they're saying here about 23 million people signed up for the Affordable Care Act coverage this past year is an open enrollment period. That's roughly 1.2 million to 1.3 million fewer signups than the prior year, which we knew that was going to be lower because of the cost of the insurance and the fact that extended tax credits for that middle class population was not extended. So you had people getting crushed with health insurance premiums. And even today, I've got clients saying, "Hey, Justin, I'm going to probably need to terminate my plan. We just can't afford, we can't justify this cost. What other options do we have?" And if that client of mine that reaches out to me has a medical condition or a pre-X condition, there's not many affordable options other than saying, "Hey, hopefully you can get employed by a company that could help subsidize your health insurance for yourself or your family." And just, I just, I don't see much news about this. I think there's some significant disruptions going on, and maybe this will, we'll get more data and details as we go into the summer because we're already in March. It's Friday the 13th, actually, that I'm recording the show. I think there was a Friday the 13th last month as well. What are the odds? But we want to see how this plays out. I'm hoping the government will offer a special enrollment period in some solutions this year or in the coming months because we've got a lot of people hurting right now and needing health insurance and needing affordable insurance as well. Let's dig in a little bit more on this article. I'll wrap up with another article and then we'll dive in to insurance costs or insurance updates. Oz believes some of the ACA enrollments may stem from fraud in sign up process, as well as the case where people were enrolled by mistake, were signed up for duplicate coverage, or received tax credits they didn't qualify for. Just brought that up a minute ago. Those individuals that went to the marketplace and are getting a tax credit, and they should have either been on Medicaid, qualify for Medicaid, or they should have been able to obtain affordable insurance through their employer. Instead, they chose an ACA plan that got subsidized. So I think you need to buckle up if you're on an individual health insurance plan, and you should have probably been on a company sponsored plan. So change is coming for that. Last year, the administration said 4 million to 5 million people were improperly enrolled in subsidized ACA coverage in 2024, costing U.S. taxpayers up to $20 billion. 4 to 5 million. So let's look at this number real quick. We were at 23 million, 4 to 5 million of those individuals, almost a quarter, should not have been enrolled or should not have received assistance for their coverage and plan. It's a lot of people nationwide. So let's see how this plays out. But these are articles that are coming up in the news. I think they're getting overlooked. And I'm glad we're talking about it today. And this is stuff that I'm going to want to hopefully visit with local legislatures on that affect their constituents and our listeners here in the San Antonio and South Texas area. Thanks for listening to the Mad Insurance Show. I'm your host, Justin Holland, with Texas State Insurances Services and Palmetto Life Group. We're so glad you joined us. If you're getting some value out of the show today so far on some of the news articles we've been providing, or you've got questions regarding insurance, give us a call. You can reach us at Texas State Insurance Services. The phone number there is 210-880-5316. Or you can visit us online at txstateinsurance.com. And remember, Texas State Insurance Services is going to focus on your individual health insurance, Medicare plans for those that are eligible, as well as employee benefits and even travel, dental, and other ancillary insurances that you might need. Palmetto Life Group is going to be our division that focuses on life insurance, long term care, social security analysis, as well as auto, home, commercial policies, as well as individual and commercial umbrella policies. So give us a call at Palmetto Life Group at 877 357 5316, or you can visit us online at palmettolifegroup.com. So let's wrap up with one more article that I found online for our show. This one was dated March 12th, yesterday, of 2026. As health insurance costs soar, CFOs seek ways to dull the pain. Companies face a roughly 9.5% surge in costs this year. That's the biggest rise in 15 years. Okay. So this article caught my eye. This is from the Wall Street Journal by Jennifer Williams. And let's dive into the article a little bit. Um, it shows Kava, which is a place I've actually had lunch at a few times. Pretty good stuff. Raised employees' healthcare premiums for the first time in years here in 20 since 2025. So that's a major company and corporation. They're feeling the pressure and the hit from higher health insurance costs, and they're having to relay that increase to their employees. It looks like. Surging health insurance costs are forcing executives to make tough decisions on how to blunt the impact to the bottom line for making changes to plans that could result in reduced coverage or requiring employees to pay more for their out of pocket health care. And that could be for premiums, that could be higher deductibles, higher copays. That those are factors that you've got to keep in check. Mediterranean food chain Kava Group raised employees' healthcare premiums for the first time in years just this past year in 2025 and is now considering covering healthcare costs itself rather than relying on the insurance provider, an option known as self insurance. That is huge. So these companies are saying, hey, we might try to take on this responsibility that we've been paying these health insurance companies for and see if we can come up from some solutions there. So, absolutely getting creative. We have been able to get creative with a handful of small, medium sized, and large businesses for their employee benefits here in the San Antonio and South Texas market. So, hey, like Kava, many business owners or businesses are grappling with these higher costs and they want to provide health insurance to their employees. But at the same time, the cost for the employee coverage are expected to surge about 9.5% this year, which would be the biggest increase in the last 15 years. They are projected to remain high next year, too. So, bottom line is this article's focusing on the fact that for CEOs and CFOs, we're at the tipping point to make significant action," said Janet Fairclough, senior vice president of health solutions through leadership at Aon. Not sure who that is, but she's right. Many of these companies that have helped subsidize, keep health insurance costs low for their valued and trusted employees are getting pinched, and they're having to get creative because these premiums are just getting ridiculous. So that's another thing to look at. You might be Medicare eligible, and your company plan is right in your sweet spot. I was just with a large manufacturing facility here in San Antonio for 2 days. We were helping out their employees, and bottom line is the conversation is like, "Hey, I'm on this plan with my company, and I'm having to pay, let's call it, $180 a month, which is just a little bit lower than what their Medicare Part B premium would be. Okay. And the problem is it's a high deductible plan that they're on that meets the Medicare requirements, but the copays, are they have exposure on copays, medications in some cases. And they're like, I really, like the lower cost, but I might want to go to Medicare and just take on that Part B premium so I can have copays and have the other benefits and value add that I would have with the Medicare. So that has been a challenge for most individuals on wanting to go Medicare from an employer-sponsored plan. I think as these costs are gonna increase, we're gonna see more employees wanna come off the company plan, depending on the plan that they're on. Because there's this one company that I met with the past 2 days, these employees have access to a pretty good insurance plan, but they've got a good, a better, and a best, a base plan, a mid, and a buy-up plan, and a lot of the employees want that mid or that buy-up plan. They want those, lower deductibles or copays, but there's an added cost to that. So when we specifically talk about how that relates to Medicare and group health insurance, that's gonna definitely be something that we want to, keep an eye on. So I'm going to keep on bringing more articles like this up on every show. Hopefully, this provides some value today because, man, there's a lot of activity going on in the health insurance market. And I've talked about Medicare insurance. I've talked about these articles that have breaking news that have come up on individual marketplace plans. And then this last article here on how it's affecting group insurance plans for some very large companies, national companies. And if they're struggling with it, the medium and smaller size companies are struggling with as just as much or even worse than what they've got. Um, Another thing that I wanted to bring up on the show, let me talk about this for a minute, is the fact that, it's tax time right now. And with tax time comes forms as it relates to health insurance, specifically a 1095 form. Many of our clients will reach out to us. Hey, Justin, I'm struggling to try to find this 1095 form for my accountant or for my CPA. I want to file my taxes, and I've got to show if I received a tax credit regarding my health insurance. For some individuals, they had, individual health insurance for the entire year. Some of them just partially through the year because they were in between coverage through an employer. So that's not uncommon. But even if they just had coverage temporarily, they've got to show that they received a tax credit or didn't receive a tax credit, and that gets reconciled. That can be a tough time for some individuals because they might have not updated their income and kept on receiving a high premium subsidy, and then they owe that money back come tax time when you're filing. I think this is going to be the year where we're going to see a lot of people get stung and didn't really take into account or really make it a priority to watch how their income is fluctuating and how it relates to their individual health insurance premium. So, where I'm going with this update is just, hey, make sure you get your 1095 form. Even if we're not your agent or broker, we can help you probably get that form. So, reach out to us if you need it and we can guide you on how to get your 1095 file form because basically that's needed to be able to submit a form 8962 for the government to reconcile everything. So that form shows, hey, here's the numbers for the tax credits, how much you received, and then it goes into the 8962 form. So just try to be proactive on that because you don't want to have to try to refile or have any disruptions there. If you have questions on that, again, give us a call at Texas State Insurance Services. That number is 210-880-5316 or txstateinsurance.com. But I thought it was important to bring up the benefit, I mean the 1095 forms because we're in the middle of tax season and just make sure you're staying on top of that. Not only is that going on, but you've got reporting requirements for, medium-sized, small, large companies as well that are gonna need to file their 1095 not their 1095 forms, but employees might be asking for a 1095 form, not realizing that they're on an individual health insurance plan when they should have been on the company plan. So, a lot of reporting going on in health insurance right now. It's exhausting for most of our clients, even us as agent brokers as well. So, brought up some great articles that we wanted to talk about and some news going on in the industry. What I wanted to do is also have another refresher on the importance of life insurance. The importance of life insurance is a topic I try to bring on to the show almost every other show or every show. And, many people think life insurance is something they can deal with later. And the reality is it needs to be done today. Okay, so if you're listening to this message and you don't have life insurance in place, or you've got life insurance and you don't think it's sufficient or enough, reach out to us and let's do a quick review and help you size that up. So, life insurance is one of the most powerful financial tools you can have available. Okay. And if you can qualify for it and have sufficient life insurance, it's absolutely going to protect your family. And that's for an unseen death or unforeseen death. There's life insurance with living benefits. And I love talking about the living benefits because you don't have to die to execute the benefits of your life insurance in some cases. And I'm going to dive into that a little bit, but let's talk about what life insurance protects. It's going to protect income, family security, mortgage obligations, educational funding, and it can even help fund retirement plans. Think about that. If you have a life insurance with a death benefit and it has a payout, and let's just say, give an example of $250,000, right? Or let's say 500,000. 250 is going to go towards, a mortgage to pay off, maybe some debt that needs to go away for the family. That other 250 could be dumped into a retirement plan and just have that compound over the years for the family members to have a nest egg later down, or the surviving family members, so to speak, whether that be a spouse or children or both in the future. So life insurance can really impact all of those situations. Living benefits. Let's dive into living benefits. So ultimately, critical illness, chronic illness, and terminal illness are going to be your go to living benefits. Okay. Most health, not health, but life insurance policies out there have a terminal illness rider. And that terminal illness rider, depending on the plan, if you have anywhere from 12 to 24 months left to live, that life insurance policy could be executed and you could actually take out a death benefit without having to die. You obviously you got to have doctors support this and say, "Hey, you got really bad news." But that terminal illness rider is huge on those individuals that have it in place with their policy. Now, not every insurance plan has that in place. So you want to make sure you double check that and see if it is. But many of them do. And some of those terminal illness policies may, have, a 24-month, uh, basically period where you got to be within 24 months. Some of them give you a little bit sooner. Hey, if you've got 12 months to live, you know, um, that's you're able to access that cash that much more sooner as well. But the chronic illness and critical illness are huge as well. Let's say you come down with a critical illness or a chronic illness, or maybe a critical injury. Um, you can access the death benefit with it relating to a critical illness, critical chronic illness, or a critical injury. That's huge. A lot of insurance policies, specifically life insurance, don't have that access. Let's give an example, and this is an example that I use a lot. Um, God forbid I have a close encounter, on the interstate traveling, and I'm in a bad accident. Now, if that accident were to kill me and I'm gone, then the death benefit goes to my family. Okay, they're going to be hopefully taken care of. Hopefully, they miss me a little bit, but financially, they're going to be in a good spot there. God forbid, I have an untimely death. So let's take that a step further. Let's say I get into an accident, and instead of it killing me and giving my family a death benefit, it really puts me in a bad state health wise with a critical injury. Maybe I can't walk anymore. Okay. Or maybe I need help with two of my six needs of daily living. And I need to get a wheelchair ramp put into my house. We don't want to sell our home. We want a wheelchair ramp there. We need a vehicle for me to be specialized. We need income replacement, to supplement that for my family. And that's where the living benefit can really shine because you can access that death benefit because of that injury or illness. Okay. And why that's important to consider is the fact that, hey, you might spend the rest of your life with an injury or illness that can really hurt you financially. And having that life insurance in place that has that benefit and being able to take that on, a long term care situation. I've got some details on long term care that I'm going to bring out to close out the show is huge and can provide significant peace of mind. Here's the catch: you got to have that insurance as soon as possible. You want to make sure you enroll in these insurance policies that have the living benefits before you need the living benefits or have an issue with underwriting. And here's why. We'll have some cases where we'll get people approved on a life insurance policy, and it has all these living benefits riders on there. You know, it's Alzheimer's, critical illness, critical injury, um, the terminal illness. And sometimes they have a medical condition that could exclude them from one of the living benefits riders that can be on the policy. So it's important for us to help you size that up sooner than later. And that could be for somebody watching this video right now or somebody online, that's listening to, or I'm sorry, not online, but on the radio waves right now that's listening to us. you know, let's talk about life insurance. Let's take a look at that. And it could be for yourself, it could be for a loved one, maybe some employees that you want to make sure are covered, or even children. Okay. We've got to make sure our generation is protected as well, not just ourselves. I will bring up one thing here that I think is going to be more prevalent in the coming years is you've got a sandwich generation. You've got a generation of individuals and families that they have aging parents that they're gonna have to take care of or currently taking care of. They might still have children, whether that's small children or adult children that need to be supported and helped from that individual and family member as well. And you get sandwiched in by trying to help both those obligations, or maybe not obligations, but because you're trying to be there for your family. And that's going to be overwhelming. And if that's the case for you, you absolutely want to make sure both families or both sides of that family equation are protected. And living benefits could be huge on protecting your children, securing life insurance for a much more affordable rate sooner than later for them, and then have the ability to possibly to convert those term life insurance policies, which we do a lot of term insurance, and you can convert that to a permanent policy. So that's pretty cool. A lot of people don't realize that you've got the ability in some with some carriers specifically to have a term policy, let's call it 10, 15, 20 plus years. And then you want to be able to convert that to a lifetime policy. That's not the case for everybody because it would be more expensive to convert it to a permanent policy. But what peace of mind is that? And I've had many clients over the years. Hey, Justin, I've got this condition that's come up. You had told me a while back that I could convert that life insurance into something more permanent because I don't think I'm insurable anymore. And we have locked in their underwriting class. They've gotten older, so that cost of insurance would increase, but we've got a strategy that they can work with for a long-term solution. Love that ability to be able to get convertibility there for policies, and that's a long-term play with our life insurance clients. Hey, this is a reasonable premium on a term life policy. Just know we'll have a strategy to convert that if you think or feel that we need to in the future. Granted, something comes up, or maybe nothing comes up, and they just want that death benefit to be there, even when they've got a long lifespan. The odds are we're going to make it to our 80s and 90s, hopefully, right? We're just not necessarily living healthier; we're living longer. So the life insurance with living benefits, we are real big advocates of, and we hope that this bringing up this topic kind of piques your interest on it. We can try to help you take a look at the scenarios and options that you have available to you. Again, you're listening to the Mad Insurance Show, making a difference in insurance. I'm your host, Justin Holland, with Texas State Insurance Services and Palmetto Life Group. Remember, you can reach out to us at Texas State Insurance Services for your individual health insurance, Medicare plans, employee benefits for your valued employees and your growing business, as well as dental, vision, travel insurance, all types of health coverage options out there. Just let us know and we can try to find a solution for you. And you can reach out to us at 210-880-5316 or visit us online at txstateinsurance.com. Palmetto Life Group handles our life insurance, long-term care planning, social security analysis for retirement strategies, as well as auto, home, and commercial lines of coverage. So we're here to help you on anything auto, home, and commercial, which we're real excited that we launched. We have so many clients that have asked us over the years, Justin, can you just handle this for us? So we created that division to help out there. And you can reach us at Palmetto Life Group by visiting us online at palmettolifegroup.com, or you can call us at 877 357 5316. So we talked about articles and updates in news. We've talked about a lot of articles on the news. I spent a lot of time on the news portion and updates today on the show. Talked about life insurance as well. Some of the things that we need to keep in mind for your Medicare eligibility and options going into 2027. Something that I wanted to bring up again right now. I talk to so many people, and my phone blows up with direct messages to me directly or to our office line. And a lot of people are in a position to where they lost coverage or didn't get coverage at all. Okay, for the past few years, and you need to make sure that you are as proactive as possible when you lose coverage. Okay, because if we're looking at individual health insurance options for you, we've got 60 days to be able to prove that you lost coverage and need to get into a individual health insurance plan. And we need documents to support that, good documents. We are really struggling right now because they are very critical on special enrollments for those getting on the marketplace. I mean, I just brought up a news article showing that, hey, they are really cracking down on the fraud and those that are on the marketplace plans that shouldn't be there to begin with. So I think we're going to see more of that. The fact that 4 to 5 million people are on the marketplace Obamacare, Affordable Care Act plans than should be, is a problem. Okay, so they are getting very strict on the eligibility to get onto individual health insurance. So if you know that you're going to lose your employer-sponsored health insurance, or you already have, excuse me, then you want to make sure very quickly you start talking to somebody. So many people will reach out to us and say, "Hey, I lost my coverage a few months ago or 6 months ago, and I need it now. I'm not feeling well." Well, you missed that opportunity. We might have a health coverage option for you that you can get outside of the marketplace, but pre existing conditions will apply on that underwriting. And that is a problem for some individuals. It's a problem right now for many of our clients because we would like to get them in a more affordable option with health coverage instead of marketplace health insurance, and they wouldn't qualify for underwriting. So there's a lot of caveats, a lot of scenarios that come into play, and you want to make sure you're utilizing a insurance agency or broker that's well versed on individual health insurance, individual health coverage, employee benefits, how it relates to Medicare. And we pride ourselves on being able to be in a position to provide the value, the analysis on how all of those relate, because they're very different. You've got people that are really good on individual health insurance, but they might not be as strong on Medicare or employee benefits. And I think that's one thing that I like to remind everybody or help separate me in the industry and other in our team that we utilize to help everybody out there with, is that we are very well versed on individual Medicare and group benefits, and we can help you decipher the differences with all of them. Okay, so went off on a little tangent there. When it comes to health coverage year round, we do have options. We've got short term medical options, which can get a maximum of 4 months of coverage. And then we have health coverage options that we might be restricted on an effective date, but we can at least get you in. Granted, you can pass the underwriting. So these are alternatives to the marketplace plans if you missed the enrollment or you missed a special enrollment opportunity for losing your company sponsored health insurance plan. Hopefully that's enough yapping on that, but we're bottom line is we're here to help you look at your individual health insurance and coverage options if for some reason group benefits are not the solution for you. Now, keep in mind, we have individuals that will start their own companies or start businesses just to have access to like a PPO health insurance plan. So that is one solution where we can look and get creative on helping those individuals. Here's the trade off with that, it's very expensive. Okay. So the cost of that is going to be high, but you want to make sure that you visit with a professional, and we'll be here to help you out with that. So, what I'd like to do in closing out the show is I want to talk about long term care. And I talked about living benefits with life insurance a minute ago, but I had a really good meeting and training, and I need to go over the notes regarding that training from yesterday with one of our carrier partners. But they gave me some good information. I kind of wanted to share that online with the video or over the radio if you're listening to us as well. So, if and when you need care, you know you've got a handful of long-term care providers out there, okay, and consider the financial implications of long-term care. Let's dive into that, okay. So, life is full of decisions. Many of them are financial. Could your financial situation be impacted by the need for care later in life? The answer to that is absolutely. Everybody's probably gonna be impacted by a long-term care need unless they just, you have an unforeseen death. But as I mentioned earlier in many shows, we're living longer, we're not necessarily living healthier. So, retirement income. So, your retirement income could absolutely be hit or really leveraged when you have a long-term care need come up. Retirement is just for your living expenses and taking care of you, maybe some of your health insurance costs. But remember, Medicare does not cover long-term care assisted living needs. Okay. So that a lot of people just kind of assume that. That is not the case. The only way you can have assistance outside of a long-term care policy for long-term care is through Medicaid. And you would have to prove that you're in an income bracket or liquidate your assets and basically become a ward of the state. Not something I would recommend. So I want to make sure if you're able to be proactive on long-term care, please reach out to us for some options there. Not only can your retirement income be affected, but I brought this up on one of the last shows too. The length of care. No one wants to depend on others. You don't know how long you might need long-term care. It could be 12 months. It could be more. So one thing that I took from the training that we had on long-term care, a refresher that we had, was the fact that you can manage that cost of that insurance, the long-term care insurance, to cover you for 12 months. Or if you're like, hey, I'd really like to have the peace of mind of that covering me longer, let me know. Okay. And we've got that solution now. If it's for more than 12 months, I mean, I think a long-term care situation, it'll last from anywhere from 12 to 36 months on the records. I'll get the stats on that for next show. But family matters, spouses, adult children, family dynamics are going to be affected by a long-term care situation. And something that I want to bring up before I forget to talk about this is underwriting. Okay. You might be as healthy as you can be right now. And this would be the time that you want to apply and lock in a long term care policy. You don't want to try to get it or apply for it when you're uninsurable or have some conditions that could affect that. So that's an important note to bring up on the long term care situation. Let's talk just briefly about understanding long term care. Long term care differs on the type of care. The goal isn't to cure an illness, but to help you function at an optimal level. Okay, that's some of the notes that I took here from the meeting. What does long term care coverage provide? Long term care protection can give you and your family a source of funds to pay for services you need. It also covers the care for family members to provide that. We talked about that in the event as well in the training. You know, you might not want to pay a professional service for your long term care support. There are plans that you can actually have that paid to a trusted family member or relative that could be taking care of you. The long-term care benefits kick in. Let's talk about the loss of 2 out of 6 activities of daily living. I brought this up a minute ago on the living benefits, but let's talk about those and then we'll wrap up the show and then you can reach out to us if you need anything. But if you cannot bathe, dress, eating, continence, toileting, and transferring, those are the 6 that if you can't perform 2 of those, that is gonna trigger your long-term care insurance to activate and execute the effectuation of that to where it starts providing you financially support on your long-term care need. If you need help with long-term care insurance review or quotes, give us a call at our Palmetto Life Group division. That phone number is 877-357-5316, or visit us at palmettolifegroup.com. And we can talk about the importance of long-term care. We can get you some great details on that, or just send you a brochure. Say, Justin, not interested in a quote. I just need some information on it. No problem. I'd like to say that for the insurance division as well, for Texas State Insurance Services. If you just need some information, give us a call, 210-880-5316, or visit us at txstateinsurance.com. Both agencies are going to be able to help you on pretty much anything you need regarding insurance, and we're really proud of that, to be able to service you on both facets of the industry. Hopefully, this show was helpful today on some of the articles that I brought up earlier. Remember, it's the Mad Insurance Show, making a difference in insurance. I'm your host, Justin Holland. Please follow us at YouTube /at MadInsuranceShow.com. We'd love to have you follow us online, and we'll talk to you soon on next week's show. Take care, everybody.